See, we are in the basic settings. See, in the basic settings, in the previous class, we have completed document types and number ranges, right? So today we have to see the field status variant. So first I will explain what is the concept of field status variant. See here, at the time of posting the transactions, we can maintain the information in 70 fields for every line item. Line item means account. Suppose if you are posting the entry rent account data to bank, in that case, rent account is called one line item and bank account is called another line item. So at the time of posting the transactions, for every line item, we can maintain the information in 70 fields. So for debit line item and credit line item, we can maintain the information in 140 fields totally. But all the fields are not required by all the accounts. Means, suppose for example, text, business area, cost center, tax rate, quantity, like that, there are 70 fields in which we can maintain the information. But all the fields are not required by all the accounts. What does it mean? Suppose, for example, we are posting two accounting documents, rent account data to cash and raw material account. So, for debit, see, we are posting two transactions, rent account data to cash and raw material account data to vendor account. So at the time of debiting rent, right, why you are debiting rent account? Because rent paid. Here text means narration. Narration means explanation. See, at the time of debiting rent, why you are debiting rent? Because rent paid. Similarly, you are crediting cash. Why you are crediting cash account? Because rent paid. Because rent paid. Similarly, you are debiting raw material account. Why? We have purchased raw material. Similarly, you are creating vendor. Why? Because raw material purchased. So if you observe, text is required for every line item, right? Then business area. Business area means branch. So for every branch, I want to prepare the financial statements. So every GL account is to be identified with the business area. For that reason, we have to maintain the business area for every line item. Okay. So text and business area are required for every line item. Now you take cost center. For the time being, understand that cost center is concerned with only nominal accounts, means expenses accounts. For example, rent is a nominal account. So cost center is required for rent. But cash account is not nominal account, it's a real account. And raw material account is real account. And vendor account is personal account. So if you observe, cost center is required only for rent but not for other accounts. Similarly, tax rate. For example, on the purchase of raw materials, there is purchase tax. So only for the raw material account only you have to maintain the purchase tax rate, and for other accounts it's not at all required. Similarly, quantity. So quantity information is to be required only for raw material but not for other accounts. So like that, all the fields are not required by all the accounts. That is why for every field in SAP there are three statuses for every field. Number one, suppressed status. Number two, required status. Number three, optional status. So for every field, the three statuses are available. So for any field, if you select a suppressed status, that field is hidden at the time of posting the transactions. Suppose if you select required status, that field becomes mandatory field. We have to compulsory enter the information in that field. If you select optional, that field is only displayed, but it is not compulsory to maintain the information into that field. So all these three statuses are available for every field, and these statuses are in the form of radio buttons. What is that radio button? I will tell you. I will show you. The uniqueness of the radio button is you can select only one field. You cannot select all the three statuses. Suppose if you select the suppressed status for the text field, required status and optional status are deactivated or deselected. Suppose if you select required status for the text field, then suppressed and optional become deactivated. Suppose if you select optional, suppressed and required will be deactivated. That is the uniqueness of this radio buttons, right? So based on the nature of the GL accounts, all the 70 fields have been categorized into 41 groups, and every group contains all the 70 fields, right? In every group, for every field, these three statuses are available. Then based on the requirements of information you have to maintain and you want to maintain, we select either suppressed status or required status or optional status for every field in every group. Then at the time of creating the GL account master records, we assign the required field status groups. So at the time of debiting or creating the GL account, the fields will be populated accordingly. Means the fields for which we have selected suppressed status will not be displayed at all. The fields for which you have selected required status will become mandatory fields. The fields for which you have selected optional status, they will be displayed at the time of posting the transactions, but it's not compulsory to enter the information. At this point of time, it is a little bit difficult to visualize the use of this field status group, but try to understand to the extent you can understand. But at the time of posting the transactions, you can clearly understand what is the effect of this field status variant. So here, every company code should be assigned with one field status variant. So for that purpose, we can use the system defined field status variant, or we can create our own field status variant by copying from one of the system defined field status variants. So all this explanation have been given here, right? Has been given here. So again, while doing the setting, I will explain. Try to understand to the extent you can understand. Now see the material. Definition of field status variant. Transaction code OBC4. It takes a little bit time. Yeah, let me complete this step. Again, I will explain document types and number ranges. Kalyan. See, 0001. This is the system defined field status variant. So according to your material, select 0001 field status variant line. Then click on copy as button. This is called copy as button. Then FSTV is equal to, FSTV means field status variant 3699. Let us give our company code name only. FSTV is equal to 3699. You can give any name, but just in order to remember the identifications, everywhere we are using our company code name. So field status name is equal to field status for 3699. Field status for 3699. Click on enter. See the material carefully. After clicking on enter, click on copy all button. This is the copy all button. See, number of dependent entries copied 42. Means 42 field status groups have been copied from 0001 field status variant to our own field status variant. Here, the system-defined field status groups are only 41. But in controlling, we add one more group. So some student has added that group in the 0001 system default field status variant. That is why it is saying that 42 groups are copied. Click enter on the message and save. Now select the 3699 field status variant line. Select the 3699 field status variant. Double click on field status groups. These are the field status groups. See, these are the field status groups. Here, general type of accounts G001, G003 material consumption accounts, G004 cost accounts, G005 bank accounts, G006 material accounts. These are the group of GL accounts, right? And this G001, G003, G004 does not carry any meaning at all. It's only the name given to some group of GL accounts. So here the G001, G003, G004, every field status group contains all the 70 fields. Okay, now see the material again. Double click on the field status group G001. Now I am going to show you the fields in the field status group G001. For that, double click on this. Again, double click on general data. This is the general data. See, these are the radio buttons, right? In the general data subsection of field status group G001, these are the fields. For every field, suppressed entry, required entry, and optional entry. And these are the radio buttons. See the material again. Select required entry option against text field. Here, this is the text field, right? For the text field, system default selection is optional entry. You select it as required entry. So when I select required entry, look at the screen, what is happening. The status is moving from optional to required. So in case of radio buttons, we can select only one radio button. Click on save. Now see the material again, please. Double click on the field status group G001. Double click on additional account assignments. Select required entry option for business area field. This is the business area, right? Optional entry is defaultly selected, but you have to select required entry. Then similarly, select optional entry for partner business area field. Select, this is the optional entry. Click on save. Now, again I'm explaining, try to understand to the extent you can. In the field status group G001, right, we have selected required entry for text, right, and all other fields are suppressed. Similarly, in the additional account assignments, we have selected required entry for business area and all other fields are suppressed. Now, here in the field status group G001, we have selected business area and text as required entry. Okay, now at the time of creating our GL accounts, for example, rent account and cash account, at the time of creating these two GL accounts, we assign the field status group G001. Okay, then from now onwards, when you debit the rent account and when you create the cash account, these two fields become mandatory fields. At the time of debiting rent account, the user has to enter text field and business area field. Similarly, at the time of creating the cash account also, right, the user has to enter business area and text field. This is the effect of the field status variant. Now see the material again. Double click on the field status group G005. This is the G005 bank accounts. For all the bank related accounts, G005 is assigned. Double click on general data. See, In the G005 also, we have the same fields. Select required entry option against text field. It was already selected. Click on save. Then similarly, double click on G005 again. Double click on additional account assignments. Select required entry for business area. Click on save. Then again, see the material please. Double click on G005 here. Double click on payment transactions. Select required entry for value date. Click on save. So for the time being, right, we have selected some required fields in these two field status groups only. So other field status groups we will see later. We use later on. Now look at this thing. In the field status group G005, bank accounts obligatory value date. Here the system is giving one suggestion. For all the bank accounts, right, we assign G005, right? So the system is giving one suggestion like in the field status group G005, you select either required entry or optional entry or suppressed entry for any field according to your requirements. But select value date as obligatory. Obligatory means required entry. System is giving one suggestion. Please select the value date as required entry. Why that suggestion is given by the system? For that, we should understand the meaning of the value date. See, value date. It is the expected date of realization of funds involved in the bank instruments, that is check or bank draft. According to the field status group G005, this field is selected as required. Then this information can be used by the treasury management module to do the cash planning. Means what? See, in the field status group G005, we have selected value date as required entry, right? Then later on, when we create the bank account, in the bank account master record, we assign the field status group G005. So in the field status group G005, already we have selected value date as required entry. Then the user has to enter the value date compulsorily. I will give one example to make you understand more effectively. See, today, 19th March 2016. Right? So today we have issued one check to the vendor. We have purchased some raw material some time back, and today we have done the payment to vendor. Okay. So what is the entry we post when you make the payment to vendor? Vendor account debtor, let us say $10,000 to bank account. $10,000. See, in the bank account, we will assign the field status group G005, in which we have selected value date as required entry. So now we are creating the bank account. So at the time of creating the bank account, the user has to enter the value date. Value date means expected date of realization of funds involved in the bank instrument. See, for example, the value date is to be entered compulsorily, remember. Suppose you have entered the value date like 22nd March 2016. This is called value date. So the user has to compulsory enter the value date at the time of creating the bank. Then what is the use of this? Here, this information is passed on to the treasury management department that today we have issued the check for $10,000. Today we have issued the check to some vendor for $10,000. We are expecting that this check will be presented to the bankers on 22nd March. So please see that funds are available in the bank so that the check is paid by the bankers. So if you have the sufficient funds, you can use these funds for any other purpose before 22nd March. But as on 22nd March, you have to see that the funds are available in the bank so that the check issued by us is paid by the bank. That's how it helps the Treasury Management Department in the cash planning. One more example. Today, we have received the check again from a customer towards his payment. 19th March 2016, we have received one check from a customer. Then we post the entry bank account debtor 25,000 to customer. So again, we are debiting bank account, right? So the user has to enter the value date. Value date means expected date of realization of funds involved in the bank instrument. Let us say value date is 23rd March 2016. Then this is called value date. Maybe post dated check also, right? Once again. Now, when the user enters the value date 23rd March at the time of debiting bank account, again this information is passed on to the Treasury Management, informing that we have received one check from a customer for $25,000 and we have deposited this check in the bank today, but we are expecting that the funds will be realized on 23rd only. Before 23rd, you cannot use this $25,000. So accounting wise, we are taking the receipt of 25,000 as receipt on 19th March. But the cash department will take this as real receipt on 23rd. So till 23rd, think logically. Think till 23rd, can you use this $25,000? No. So from 23rd only, we can use this $25,000. That's why SAP suggests that to make value date as required entry. Remember, yes, Giri, good evening. Remember that it's only a expected date. Here, at same time, at 6:10 I started. Giri. I started late 10 minutes. See, it is only I will tell you, it is only the expected date of realization of funds. Right? It's only expected date, may not be realistic date. So there are chances that the check may be presented to the bankers in the case of vendor payment. The check may be presented to the bankers before 22nd also. As far as to provide the realistic information to the cash planning department, we make use of the value date. So in the accounts department, the persons who are dealing regularly with the banks, they can understand. And every bank will have some collection policies, right? See, the same bank check, right, can be created in one day. Other bank checks, outstation checks, may take 2-3 days. So like that, it depends upon the bank policy. So the person who is dealing with bank, they can easily understand. Okay, that is the use of the value date. And Kirtivansa has posted one question. Just look at his question. Asset is increased on 19th or 20th. Posting date only. The asset is increased. Kirtivansa. Asset is increased on the posting date. You came late, Giri. Just listen to this recording, right? You cannot understand in between. Okay, Giri. Because a lot of explanation has been over before you come. Okay. So that is the use of the value date. I hope the concept is clear to everybody. So here, when there are chances that the check will be presented to the bankers before 22nd, then what is the use of this value date? Here we want to be realistic as far as possible, nothing else. Okay, and later on we can make one setting wherein the current date itself will be taken as the value date. What is that setting? I will show you. And if anybody wants, they can write it down. 1 second. Giri, I started the class at 6 o'clock. Our time is 6 o'clock, Indian time.
Sir, I don't have any information, sir, whether it started at 6 o'clock.
No, last week also we have started 6 o'clock, no?
No, sir, 6:30 you told me.
No, 6 o'clock only. All the people came. Actually, I started the meeting 10 minutes late. The people are waiting.
Okay, sir. Sir, what is this concept, sir? Could you please give me outline?
Okay. See, there is one concept which is called field status variant, right? So, in the field status variant, what do we do exactly is, we decide what are the fields to be maintained compulsorily at the time of posting the transactions and what are the fields which are not to be maintained at all. Because at the time of posting the transactions, we have to maintain the information in some fields, right? So we decide what are the fields to be maintained and what are the fields which are not to be maintained. For the fields to be maintained compulsorily, we select required entry. For the fields which we don't require at all, we select a suppressed entry. Then at the time of posting the transactions, whatever the fields you selected required entry will become mandatory fields. Whatever the fields for which you select suppressed entry, they will not be displayed at all. These settings are done in one variant. That variant is called field status variant. Anyhow, I will send you the recording now, Giri. Just listen to the recording, and if you have any questions, again I am ready to explain you. I hope the concept is clear to everybody. Okay. Now see the next step. Kalyan, I will come to your question again. See the step number 6.2. Assign company code to field status variant. Transaction code OBC5. Click on position. I'm sorry. Yes. OBC5. 1 second. Assign company code to field status variant OBC5. By mistake, I have entered OBC4. Click on position. Company code is equal to 3699. Company code is equal to 3699. Click on enter. Field status variant is equal to 3699. Click on save and enter. Now, here Kalyan is asking me to explain the concept of document types again. Just it takes only 2 minutes, right? I will explain again. See here, we post different types of business transactions into accounting, right? So as an accounting people, we can understand by just looking at the entries, the accounting people can understand what is the nature of the business transaction, right? But there are some other people in the organization who don't have any accounting knowledge, but still are concerned with analysis of accounting documents. So for the convenience of understanding the nature of business transactions, SAP has developed the concept of document type. See, we post the business transactions in GL accounts, vendor accounts, customer accounts, and asset accounts, right? So in the GL account, in the general ledger accounting, we post the expenses and revenues. In the accounts payable, we post the purchase invoices, payments to vendors, and also some other transactions like purchase returns. Then in the account receivable also, we post the transactions like sales invoices, payments received from the customers, sales returns, etc., etc. So when you post the business transaction in the general ledger accounting, an accounting document is generated, right? On the face of that accounting document, the system automatically gives the letter SCA. When you post the purchase invoice in the accounting, in FI, an accounting document is posted. On the face of that accounting document, the system automatically gives the letter KR. When you post the payment to vendor, again an accounting document is posted. On the face of that accounting document, the system automatically gives the letters KZ. When you post the purchase returns into the system, an accounting document is posted. On the face of that accounting document, it will give the letters KA. So with the help of the document types, anybody in the organization can understand the nature of the business transaction. If you see the letters SCA on the face of the accounting document, it is the general ledger document. If you see the letters KR on the face of any accounting document, it is the purchase invoice. If you see the letters KZ, it is the vendor payment. If you see the letter KA, vendor purchase returns. That is the purpose of the document types. Till now clear, Kalyan? Now, good. Now, in an accounting year, in the general ledger accounting, you may have to post 1 lakh number of business transactions. So, 1 lakh number of documents are posted in the general ledger. In that case, how to identify each and every individual document? For that, we use the number ranges, nothing else. For SCA, we have defined in our class 1 to 1 lakh. For KR, we have defined 1 lakh, 1 to 2 lakhs. For KZ, we have defined 2 lakh, 1 to 3 lakhs. So when you post the first accounting document in the general ledger accounting in the accounting year, it will take 1. When you post the second document in the general ledger accounting, it will take 2. Third document, 3. When you post the first purchase invoice, I will come to that point, Kirti. When you post the first purchase invoice, it will take 1 lakh 1. Second purchase invoice, 1 lakh 2. Third purchase invoice, 1 lakh 3. That is the meaning of the document number ranges. That is the purpose of the number ranges, right? I just explained you in brief, right? Okay. So here, these document types were already defined in the system. We can use these document types as it is, and we use these document types in most of the cases. We use the system defined document types only in most of the cases. If necessary, we can also define our own document types. Clear, Kalyan? Okay, that's fine. Now, see the next step, next topic, tolerance groups. Put heading in the notes, please. Tolerance groups. Tolerance groups. We have to define the tolerance groups we have to define the tolerance groups for the following objects in the financial accounting. Number one, GL accounts. Number one, GL accounts. Number two, users. Within brackets. Employees in the finance and accounts department. Then vendors slash customers. So these are the three objects for which we have to define the tolerance groups in financial accounting. So at this point of time, we will see what are the tolerance groups for GL accounts, what are the tolerance groups for users, and for vendors and customers, we will see in the accounts payable and accounts receivable module. So that is the step number 7.1. Define tolerance groups for GL accounts. What is this? The tolerance groups for GL accounts. Setting the maximum limits equal to which or below which the differences in the balance sheet GL accounts are automatically taken to the profit and loss account or some predefined account like sundry balances written off account. Again, I am repeating the sentence. Setting the maximum limits equal to which or below which the differences in the balance sheet GL accounts are automatically taken to the profit and loss account or some predefined account like sundry balances written off account. Means what? I will explain you with an example. See, before going to understand the tolerance groups for GL accounts, we have to understand one concept which is called open items. Open items means pending items. The literal meaning of the open items is pending items. So the concept of the pending items is applicable to vendor accounts, customer accounts, and some balance sheet GL accounts. So what is the pending items or what is the open items relating to vendor accounts? Suppose today we have purchased some raw material from a vendor for $1 lakh and he has given 30 days credit. And when we purchase the material, automatically we post the entries. So when we post the entry, the system updates the vendor account balance. In addition to this, updating the vendor account balance, the system will display this purchase invoice in red color. Red color means open item. Open item means pending item. What is this invoice pending? This invoice is pending for payment. So when the vendor has given 30 days credit, we make the payment only on 30th day. So till you make the payment on that invoice, the system will display this purchase invoice in red color. So whenever the user observes any invoice in red color, he can understand that, okay, this invoice is pending for payment. That is the use of the open items. I hope it is clear. When we make the payment on 30th day on this purchase invoice, that invoice will be turned into green color, which is called cleared item. Cleared item means the invoice on which the payment has been done. That is the concept of open items relating to vendors, and this again I will show you in the accounts payable. Then coming to customer accounts. We have sold some goods to a customer for $10,000 and you have given 15 days credit. So when does the customer makes the payment to us? On 15th day. So till you receive the payment from the customer on this sales invoice, the system will display this invoice again in the red color, which means it is pending for payment or it is pending for receipt. Again, when we receive the payment from the customer, that sales invoice will be turned into green color, meaning that on that invoice we have received the payment. This is called open items relating to customer accounts. Open items relating to customers, again I will show you in account receivable. At this point of time, we have to understand the concept of open items relating to GL accounts. This concept of open item is not applicable to all the GL accounts. It is applicable to some balance sheet GL accounts. What are those? Outstanding expense account, outstanding incomes account, prepaid expense account, and incomes received in advance account. So what is this outstanding expenses, outstanding incomes, etc., etc.? Here, in the accounting, we have to follow the concept of accrual. One second, let me change the dates. See, we have to follow the concept of accrual. What is the accrual concept? The main purpose of maintaining the books of accounts is to find the results from our business operations. Periodically, every business enterprise, they want to find the results from the business operations. Periodically means generally every month. Okay, so I want to find the profit or loss for the month of March. Then what we have to do? Simply saying, we have to compare the expenses of March month with the revenues of March month. Then only you can find the exact profit or loss for the month of March. But there are some expenses which are incurred in the current month but paid in the next month. Suppose, for example, take rent. Rent of March will be paid on 1st April. Rent of April will be paid on 1st May. Again, let us assume that we are paying the salaries on 1st of every month. Okay. So, the salaries of March will be paid on 1st of April and the salaries of April will be paid on 1st of May. So, if you account for the expenses only when they are paid, then what is happening? The rent of March is accounted in April. The salaries of March are accounted in April. So actually this rent and salaries are related to March month only. But we are paying in April, and if you account them, when you actually pay them, they are accounted in the month of April. Means the expenses of March are considered in the month of April. So in that case, if you prepare the P&L account and balance sheet for the month of March, it will not show correct picture of the profit. That's why we post some entries on the last day of every month if you are preparing the monthly financial statements. For example, on 31st March 2016, we are preparing monthly financial statement. So by that day, right, we have incurred rent. Means we have used the services of the landlord. We have incurred salaries. Means we have used the services of the employees. And we have incurred commission. Means we have used the services of some other person. So these are the expenses incurred in the March, but by 31st March they are not paid. So in order to recognize these expenses, in the month of March itself, we post some entries. Those entries are called accrual entries. Here on 31st March 2016, we post one entry in this case. Rent account debtor, salaries account debtor, commission account debtor to outstanding expense account or expenses payable account. Rent account debtor 10,000, salaries account debtor 20,000, commission account debtor 5,000 to outstanding expense account 35,000. So by virtue of this entry, if you post this entry in the outstanding expense account, these three line items means accounts. These three line items are posted to the credit side of the outstanding expense account. Did you pay these expenses as on 31st March? No, they are pending for payment. So these three items will be shown in the red color, which is called open items. I hope till now it is clear to everybody. Okay, fine. On 1st April 2016, you have paid the above expenses. Then we debit the outstanding expense account to cash, rent 10,000, to cash salaries 20,000, to cash commission 4,800 only we have paid. Now, according to this entry, these three line items are posted to the debit side of outstanding expense account. To cash rent 10,000, to cash salaries 20,000, to cash commission 4,800. These three items will be shown in red color. Means they are paid items. Now, again, we are preparing the P&L account and balance sheet on 30th April. Then we balance the outstanding expense account. So in the outstanding expense account, total credit side is 35,000, right? And the total debit side is 34,800. So there is a credit balance of 200 rupees. Let us talk about in terms of rupees, right? If you talk about in terms of dollars, it becomes a big amount. Let us talk about in terms of rupees. So there is a credit balance of 200 rupees in the outstanding expense account. I hope till now it is clear to everybody. If anybody is having the doubt, ask me now itself. I will explain again, then I proceed further. So there is a balance of 200 rupees in the outstanding expense account. Okay, I think there is no any doubt to anybody. Okay, now we are preparing P&L account and balance sheet again on 30th April. So yes, further till I am coming, Giri. See, in the balance sheet, see on 30th April, where do you display? Giri, when you post any question, right, please post it in entire audience, right? If you post the question in private, right, I can only see, others cannot see. So please post the question in the entire audience so that others also can look at your question, and when I give the explanation, they can also understand. Yes, Giri, thank you. Yes, let us see, right? How to process this 200 rupees, let us see. That's what I'm going to explain you now. So where do we display this difference of 200 rupees? In the balance sheet or in the profit and loss account? That is the question here. Here, whether we have to transfer this 200 rupees as revenue or expense to the P&L account, or whether it has to be transferred to balance sheet, is decided by the reason of this difference. I will give you two reasons. Suppose, for example, actually commission provided is 5,000, right? But you have paid actually 4,800. That's why there is a difference of 200 rupees. Now, I will tell you two reasons for this difference. The person to whom you have provided commission, he came to our office on 1st April exactly at 4:50 evening. Our closing hours are 5 o'clock evening. He came to our office exactly at 4:50. So I am the junior cashier. So at that time, I have only 4,800 rupees with me. Then the main cashier has left the company on some other outside work early. So he is not available. And I am having only 4,800 rupees. Then I said to the commission agent, sir, take this 4,800 rupees today. Okay. So I don't have any balance now today. And the cashier, main cashier also has left the company because of some work. So when you come next time, you collect this 200 rupees. For that, commission agent agreed. That's why I have paid 4,800 rupees. That's why there is a difference of 200. If this is the reason for this difference of 200, right, it has to be shown, it has to be transferred to balance sheet as liability. Because after all, for 200 rupees, right, the commission agent did not come to our office till 30th April. That's why still there is a balance. See, if that is the case, still there is a liability on our part to make the payment of this 200 rupees to the commission agent when he comes next time. If that is the reason, it's a liability. It is to be shown as a liability in the balance sheet of 30th April. Okay. One more reason I will tell you. The person to whom you have provided commission, he said, sir, I have been dealing with your company since a long time. So in this particular transaction, I am giving you a discount of 200 rupees. That's why I have paid only 4,800 rupees instead of 5,000. That's why there is a difference of 200 rupees. If that is the reason for this difference of 200 rupees, it's a revenue to us, discount received. If that is the reason for this difference of 200 rupees, that is to be transferred to profit and loss account as a revenue. Okay. So here, if you prepare the profit and loss account and balance sheet manually, as a human being, you know the reason for this difference. And accordingly, you will decide whether it has to be transferred to balance sheet or profit and loss account. But here, the system itself will prepare the P&L account and balance sheet. In that case, it should know whether it has to be taken to P&L account or balance sheet. That instruction we give the system with the help of the tolerance groups. So here, setting the maximum limits equal to which or below which the differences in the balance sheet GL accounts are automatically taken to the profit and loss account or some predefined account like sundry balance written off account. Based on the requirements of the accounting department, we define different tolerance groups and assign them in the respective GL account master records. Based on the limits specified in those tolerance limits, the difference in that GL account is automatically transferred to profit and loss account. Means, suppose we have defined 3 tolerance groups. Tolerance group A, 150 rupees. Tolerance group B, 100 rupees. Tolerance group C, 200 rupees. Now, after defining the tolerance groups, at the time of defining your expense account, outstanding expense account, we assign the required tolerance group. So in that case, if you assign either group A or group B in the outstanding expense account, the difference of 200 is more than these two upper limits, right? So when the difference is more than the upper limit, the difference is transferred to balance sheet. In this case, see here, we define different tolerance groups with different upper limits. For example, group A, 150 rupees, group B, 100 rupees, group C, 200 rupees. Then, based on the requirement, we assign the required tolerance group. Then, the system will compare the difference in that GL account with the upper limit of the tolerance group. If the difference is more than the upper limit, the difference is transferred to balance sheet. If the difference is less than or equal to the upper limit, then the difference will be transferred to P&L account. In our example, suppose you have assigned group A in the outstanding expense account. So difference 200 is more than 150 rupees. Then that will be transferred to balance sheet. Suppose if you assign group C, the difference is equal to upper limit. Then that will be transferred to profit and loss account. I am coming in the reverse way. In any GL account, if the difference is equal to 200 or less than 200, if that is to be transferred to P&L account, then in every GL account of balance sheet, we assign tolerance group C. Otherwise, we assign tolerance group A or B. This is the concept of tolerance groups for GL accounts. We just to decide how the residual balances in the GL accounts are to be processed. Whether the residual balances in the GL accounts, balance sheet GL accounts, are to be transferred to profit and loss account as balance sheet. That is answered by tolerance groups for GL accounts. See, the limits are applied at the account level, not for the every transaction level in that GL account. Means the system will consider the total difference The system will consider the total difference of the account, not at the item level. Are you getting? Now, a tolerance group can be assigned in any number of GL account master records. The upper limits can be specified either for the debit differences or for credit differences separately. This is the concept of the tolerance groups for GL accounts. See the material. Define tolerance groups for GL accounts. SPRO. Financial accounting. See the path. Financial accounting. General ledger accounting. Business transactions. Open item clearing. Clearing differences. Define tolerance groups for GL accounts. Don't write, right? Just look at the screen. Click on new entries. Here, if you want to define the tolerance groups like this, right? How to do that? Very simple, just look at the screen. Company code 3699. Don't write tolerance group A. For every tolerance group, you can use up to 4 characters. Just like that, I'm using 1 character. Then, description or name, upper limit 100. Debit posting 100. Credit posting 100. Click on save. Then click on next entry button. Company code 3699. Tolerance group B. Upper limit 150. Debit posting 150. Credit posting 150. Click on save. Then click on next entry button. Like that, define another tolerance group. Like that, we can go on defining any number of tolerance group. So at this point of time, you just define the tolerance groups. Where do we assign? I will show you in the general ledger accounting. Right? Now you write in the material. Company code is equal 3699. Yeah. It is OBA 0. Transaction code is OBA 0. OBA 0. Transaction code is not there. Write down please. Company code is 3699. Tolerance group blank means field, keep that field blank. I will tell you why. Name is equal to blank tolerance group for 3699. Blank tolerance group for 3699. Click on save. So against that step, you have some space, right? Please write down here. The blank tolerance group is also called null tolerance group. The blank tolerance group is also called null tolerance group, NULL. The blank tolerance group is applicable to all the GL accounts. Which are not assigned with any tolerance group. So generally in the training class, we define the blank tolerance group. Suppose for any GL account, if you don't assign any tolerance group, then this tolerance group is applicable. Look at the screen, everybody again. Here we have the debit posting percentage, credit posting percentage. Means what? We can enter the upper limits either in terms of whole amounts. Whole amount means 100 or percentage or both. We can enter the upper limits either in terms of whole amounts or percentages or both. So if you enter both the terms, the system will apply the percentage on the total of the account and it will consider the lower of the two as upper limit. Suppose for example, tolerance group A, $150 you have given and also 1% you have given. Then the system will apply 1% on the total of the account. What is the total of the account? 35,000. 1% on 35,000 means 350. So 150 and 350. Of these two, which one is the lower? 150. Then the system will take this 150 as the upper limit and it will act accordingly. Means the 200 is more than 150. Then it is transferred to balance sheet. That is the meaning of that. Okay. Now, see the next step. Step number 7.2. Define tolerance groups for employees. This we will see after 10 minutes break. Right? Let's have a break of 10 minutes. Yes, I am back. Kalyan, are you there? Kalyan, are you there? Kirti? Okay, Kalyan. Kirti? Tahir? One second, one second. Are charging with you? Okay, Tahir. Shailaja?
Somehow last I couldn't hear
Shivakumar?
the voice.
Yes, sir. Under.
Okay. Tejasvi?
Hello. Hello, sir.
Okay, Shailaja. Tejasvi?
Hello, sir. Yes, I'm here.
Okay. V and Giri? Giri, can you hear me? Okay. Now. Okay, Giri. No problem. I have not yet started, right? I'm just verifying whether Shailaja can hear me or not. See the step number 7.2. Yeah, before 10 minutes, okay. I will be sending you the recording because you have gone offline, Shailaja. That's why you could not hear me. Anyhow, we'll send you the recording now. See, step number 7.2, define tolerance groups for employees. So first I will explain the concept of tolerance groups for employees. See, setting the maximum limits for the posting procedures of employees. Employees means users in the finance and accounts department. Setting the maximum limits for the posting procedures of employees. Posting procedures means posting activities. So with the help of the tolerance groups for employees, we can control the posting activities of the employees in the organization. How? What are the posting procedures? The amount of a document means a business transaction. The amount of a business transaction an employee can post in GL accounts, vendor accounts, customer accounts, and asset accounts. You know that there are some account types: GL accounts, vendor accounts, customer account, and asset accounts. So you take any employee, as far as postings are concerned, they have to post the business transactions either in the GL accounts, vendor accounts, customer accounts, and asset accounts. For this activity, we set up the upper limit. Then another posting activity. The amount of open item he can deal with. Open item means pending purchase invoice and pending sales invoice. So when you make the payment to the vendor on the pending purchase invoice, that is to be posted by the employee only. And when you receive the payment on the pending sales invoice, that is also to be posted by the employee only. For that activity, again, we set up the upper limit. Then the amount or percentage of cash discount he can offer or post. Means, suppose for example, we have sold some goods to a customer for $10,000 for 1 month credit. And we said, if you make the payment on 30th day, right, we will give you a cash discount of 3%. So the customer has made the payment on 30th day and we have to give him a cash discount of 3%. This is called cash discount paid. So the cash discount is paid is also to be posted by the employee only. So up to how much percentage he can post cash discount paid or cash discount received. Similarly, the amount of the payment difference he can accept. The amount of the payment difference he can accept. Means, see, today a customer has to make a payment of $10,000 on an invoice, but he has paid only $8,000, saying that he will pay remaining $2,000 later on. This is called payment difference. So up to how much payment difference the employee is authorized to accept. So these are the 4 posting activities. So based on the requirements of the accounts department, for all the 4 posting activities, we set up the upper limits under different tolerance groups. For example, we are defining tolerance group A, tolerance group B, group C, group D, 4 groups. Under every group, we set up the upper limit for all the 4 posting activities. Number 1, first posting activity. The amount of a business transaction an employee can post in GL accounts, vendor accounts, customer accounts, and asset accounts. For that activity, you set up the upper limit $1 lakh under group A, $2 lakh under group B, $3 lakh under group C, $4 lakh under group D. And these upper limits we cannot decide on our own as a consultant. We have to take into consideration the requirements of the accounts department. Based on their requirements only, you define the upper limits. Means they will give you their upper limits required. Then, second posting activity. The amount of open item he can deal. Means he can post either payment received from the customer or payment made to vendor up to these amounts. 1,50,000, 2,50,000, 3,50,000 and 5 lakhs. And cash discount. 0% under group A, 1% under group B, 2% under group C and 5% under group D. Then fourth posting activity, payment difference he can accept. $1,000, $2,000, $4,000 and $5,000. Like that, we define number of tolerance groups with the upper limits for these 4 posting activities. Then these are the employees who are connected to the accounts department. These are the employees who are concerned with the accounts department. For example, group 1, junior accountant, junior cashier and the accountant. Similarly, under group 2, we have the accounts officer, senior accounts officer. Under group 3, manager finance, senior manager finance, and under group 4, GM finance and director finance. So these are the employees. Means for every employee, user IDs are created and given by basis consultants, right? Then what the FI consultant will do is, he will assign the tolerance group A to the user IDs of all these 3 employees. Okay? And group B is assigned to the user IDs of the group 2 employees. And group C is assigned to the user IDs of group 3 employees. And group D is assigned to the user IDs of group 4 employees. As a result, as far as postings are concerned, remember, as far as postings are concerned, these upper limits are applicable to those employees. Means either the junior accountant or junior cashier or accountant can post a business transaction either in the GL accounts, vendor accounts, customer accounts and asset accounts up to 1 lakh. The business transaction amount is more than 1 lakh, these people cannot post. Similarly, the junior accountant or junior cashier or accountant can post a business transaction. Can post either payment made to vendor or payment received from the customer up to an amount of 1,50,000. Then these people cannot post any cash discount because 0% cash discount. Like that, these limits are applicable to these employees, these limits are applicable to these employees, and these limits are applicable to these employees. This is the concept of tolerance groups for employees. Okay. Today, we have purchased some raw material for $3,75,000. The invoice amount is $3,75,000. Now, according to tolerance limits, by whom this $3,75,000 is to be posted? Actually, the $3,75,000 is below the 4 lakhs limit, right? So, the group D is assigned to GM finance and director finance. According to the tolerance limits, this purchase invoice to be posted by either GM finance or director finance. And the GM finance and director finance will post the purchase invoice into system? No and never. Whatever may be the amount of business transaction, that is always to be posted by the lower level employees only. In this case, this purchase invoice is also to be posted by one of these 3 people. But what is their authorization limit? 1 lakh. So technically speaking, they cannot post it. But this is to be posted by these employees only. That's why these people has to get the approval. These people means junior accountant or junior cashier or accountant who is posting this purchase invoice has to get the approval either from GM Finance or Director Finance. For that purpose, right? For example, junior accountant is posting. So the junior accountant will enter this purchase invoice into system and he will keep it pending for getting the approval either from GM Finance or Director Finance. This process is called parking the documents. So how the documents are parked and how they are authorized by higher level employees. This we will discuss in the general ledger accounting. We have the separate topic on parking of documents. Then I will show you how to park the document and how they are authorized and other functions relating to parked documents, etc., etc. But here, what you have to understand is, with the help of the tolerance groups for employees, we can control the posting activities of the employees in the organization. Remember these tolerance groups. I mean, these upper limits, we cannot decide on our own. In the case of tolerance groups for GL accounts also, these limits we cannot decide. See, in implementation projects, the consultant cannot decide anything on his own. Remember, everything we have to look into the requirements of the accounts department, and based on their requirements, we have to develop the configuration settings. Now, define tolerance groups for employees. Path is same as above. Transaction code OBA 4. Transaction code is not there. Transaction code OBA 4. Again, don't write, just look at the screen. Group A, company code 3699. Please don't write. See, upper limits for posting procedures. Amount per document, 1 lakh. Then amount per open item account item, 1,50,000. Then cash discount per line item, 0%. Then payment differences, revenue 1,000, expense 1,000. Click on save. Then click on next entry button. Group B, company code 3699, and you enter the values of the group B. Click on save. Click on next entry button. Like that, we can go on defining any number of tolerance groups. Right? Now you please write down. Group is equal to blank. Group is equal to blank. Company code 3699. Company code 3699. Then amount per document, you enter some 8 or 9 nines. I will tell you why. You enter some 8 or 9 nines or 10 nines, whatever it is. Amount per document is equal to 9 nines or 10 nines. Then amount per open item account item is equal to, again, you enter 10 nines or 9 nines. Then cash discount per line item, 5%. Click on save. Here, in the next step, we are going to assign this blank tolerance group for your users, for your user IDs. As a result, while doing the practice, you can post the amounts up to these amounts. Suppose if you enter 1 lakh, 1,50,000, etc., etc., if you assign that tolerance group to your user ID, at the time of doing the practice, you have to keep in your mind these limits. By mistake, if you enter the amount more than that, you cannot post it. That's why, in order to enable ourselves to post any amount while doing the practice, I have given this much amount, nothing else. See the next step. Assign users to tolerance groups. Transaction code OB57. Transaction code OB57. Click on new entries. Username. Here I have given the username to every one of you, right? So you have to enter your username there. Username is equal to, here I am giving my username, and in your material you write your username. Tolerance group blank. So we have assigned the blank tolerance group to our user IDs. So while doing the practice, you can post up to these amounts. Here you see the error message. In my case, an entry already exists with the same key because I have the 4 batches always going on simultaneously online. So for every class, I log into the SAP server using FSUO Lakshman only. So for the previous batch, I have assigned the same thing to my user ID. That's why I am getting this error message. But in your case, you should not get any error message. You should get the message data was sent, because every one of you has received the user ID. Then see the material. Last step in the basic settings. Enter global parameters. First let us do the step, then again I will explain. Transaction code is not there. Transaction code is OBY6. OBY6. First let us do the step, then again I will explain. Click on position. Company code is equal to 3699. Click on position. Company code is 3699. Click on enter. See, your company code is taken over here. Select the company code 3699. Select the company code 3699. Click on details button. See, look at the screen, everybody. Till now, we have defined some objects, and those objects we have assigned to company code. And all those objects we can display here. Our company code is 3699, right? Our country is US, company code country. Currency USD, language English. Chart of accounts 3699. You have defined the chart of accounts and they have assigned to company code, right? Then company 3699 GE. Then fiscal area variant K4. We have assigned the fiscal area variant to our company code, right? Then you have defined the field status variant 3699 today and assigned to company code. And posting period variant is 3699. So you can display the details of all the details of your company code in this global parameter screen. In addition to this, right, see your material. Select business area financial statements. Select proposed fiscal year. Select define default value date. Select negative postings permitted. So for every company code, minimum to minimum, you have to select these 4 check boxes, 1, 2, 3 and 4. Click on save. So what is the impact of these 4 selections, right? Go back to notes, please. Put heading in the notes. Global parameters. Global parameters. The settings made in this activity. Yeah, you can directly assign here, right? Objects you have to create separately, but assignment can be done in this particular screen, Kirti. You can assign them in the respective transaction codes, or in OBY6, you can assign all the objects here. Put heading global parameters. Global parameters. The settings done in this activity, are applicable to the company code as a whole. Under that, Put heading Business Area Financial Statements. Put heading Business Area Financial Statements. By selecting this indicator, we can prepare the business area financial statements. We can prepare the business area financial statements. Means what? Here, if you want to draw the financial statements for each business area, you have to compulsorily select this business area financial statements. Suppose, if you don't select this, the system maintains the information according to business areas in the database, but it will not allow the user to draw the statements. So in any case, if you draw the statements, financial statements for each business area, you have to select this. Okay, next. Propose fiscal year. Propose fiscal year. By selecting this indicator, the system automatically defaults. The system automatically defaults the current fiscal year at the time of displaying the documents. Next number, this I will show you at the time of posting the transactions. Next, number 3. Define default value date. By selecting this indicator, the system automatically defaults the system date within brackets current date as value date. This also I will show you at the time of posting the transactions, right? Next, negative postings permitted. Negative postings permitted. By selecting this indicator, we can use the reversal function. For correcting the error documents. So, what are the reversals? How do we correct this error document? We will discuss in the general ledger accounting. There are different types of reversals. right? All these reversals we will discuss in the general ledger accounting. So these are the 4 fields which are to be selected for every company code. Then what about other fields? Based on the requirement, we have to select. Suppose here other fields I did not explain, right? Even though I don't explain, right? You can understand what is the purpose of the fields. Here, suppose for example, discount basis net value. Okay. So if you select this indicator, what happens? Actually, I did not explain you this. Okay. I want to know what is the impact of selecting this discount based net value. So in that case, keep the cursor on any field. Not only here, everywhere in SAP fields, SAP streams. Just to keep the cursor on any field, press F1. Then the system will tell you what is the purpose of that field. Here, discount base net value. Discount base amount is net value, means indicator with the effect that the sales tax is not contained in the base amount for discount calculation. Again, I am repeating. It is the indicator with the effect that the sales tax is not contained in the base amount for discount calculation. What does it mean? See, we have sold some goods to a customer today. Base price is $1,000. Then on this, we add 10% VAT. $100. Then what is the sales invoice price? $1,100, right? $1,100. See here, this $100 is not revenue. This tax you have to pay to customer, this tax you have to pay to the government on behalf of the customer. So you receive $1,100 from the customer as a sales revenue, right? Out of which $100 you have to pay to the government in the form of sales tax, right? Now, you said to the customer that if you make the payment in 15 days, we will give you 3% cash discount. Okay? Then the customer has made the payment on 15th day. Now you have to give the cash discount. And how much amount you have to calculate discount of 3%? On $1,000 only. Because this tax portion is not our revenue. This is paid to the government. So when this $100 is not our revenue, how can you give the discount on $100? Logically, the discount is to be calculated on $1,000 only. That is the impact. Tax-based net value means the system does not consider the tax portion in the base amount for the purpose of calculation of discount. Base amount means the amount on which the discount is calculated. Got the point? But at this point of time, right, it is little bit difficult to understand these things, right? But once you start doing the practice and once you attain some depth in the subject, right, you can easily understand these things. That's how you can broaden your knowledge. It's not possible to explain you every field in the class, right? But general business processes we will cover in the class. But you have to develop your knowledge on your own also, right? So with this, our basic settings are over, right? Then we have to start the general ledger accounting. Actually, unfortunately, I was very much delayed in the office, right? I had to send you the general ledger accounting material. I could not send you. Just before I came to the room and switched on the laptop, right? I did not even change my dress also. On the office dress only I was teaching you, right? So that much was delayed today, unfortunately. That's why I could not send you the general ledger accounting material, right? Today, along with this recording, I will send you the general ledger accounting material and we start general ledger accounting tomorrow. And remember, our class timing is, if anybody gets confusion, right? Our class timing is 6 p.m. Indian time, right? 6 p.m. Indian time. Kayan, you have any questions in today's class? Okay. Kirti? Yes, exactly, Kirti.